Sitting down today with Jean-François Boucher, your scalping coach here at the Trade, who's really one of the best scalpers out there that I know of, who's scalping full-time, trading the 1-minute chart. So thought it'd be good to kind of sit down, go through a review of what he's been trading today and share with you guys a bit of behind the scenes. So let's just dive into it.
And so this particular trading account, so we started in this account on the 7th of August, 2025, so just a few weeks back. I'm trading this account on Tuesdays and Thursdays, only with our desire to trade traders. We've put in about 314 trades in the account so far to date. Losing trades, we've had 21 of those 314. And if we look at the overall performance since inception, we've put in about $4,500 of profit. We've paid $1,500 out in costs, right, which is about 1/3, which is normal for this system. Right? It's not out of the ordinary. The average pips per trade is in the neighborhood of 3, plus or minus a little bit of slippage. And in total in the account since inception, we've moved $52 million with leverage, right? 20-to-1 leverage. And so overall, the account is performing quite well. And then if we just want to see what we've done, this would have been Tuesday, Thursday, Tuesday, Thursday, Tuesday. I missed this week's Tuesday. I was away on vacation, so today is Thursday. And you can see here we've had a couple of losing trades on that day. We had a couple of losers on that day. And I think we had a couple of losers on that day. Right? So overall, we're trading on schedule. We're trading a couple hours each time. And we're trying to stick to an average number of clicks or number of trades per session. Right, so the idea is to find consistency, find our little groove, figure out what we're capable of in that 2 hours, and see if we can extract it when I come the next time for 2 hours. Right, so I'm not trying to shoot for the moon. I'm not trying to make $1 million all in one trading session. I'm just trying to get to my average, my potential average, and try to walk away with my profits, right, without giving back. And that's kind of where we come in and start to look to our left to average the past, right? And see if we can average the past. And today happens to be an average day. We don't have to overcomplicate things, right? Ask for a lot less than what your brain wants, right? Your brain wants to be filthy rich instantly. But we can see from the charts that things are ranging, things are trending, things are not doing the same things all the time, right? It's difficult to anticipate what we should be holding on to and what we should be getting rid of, right? So if you're a swing trader, you typically would have only one entry, and you're waiting for that one trade to pay or to, prove you wrong. And we take a different approach, right? So you can clearly see on any one of these trading sessions, we've opened multiple trades and closed multiple trades. And so it's not just, a set and regret. It's really more of a making an assumption and then reassessing that assumption as we get more information. We're not willing to leave one trade and walk away. If that one trade gets into trouble, we aim to fix it somehow. Maybe by just, cutting bait, minimizing the damage. That's not regularly what we do, right? But that is an alternative. So learning to lose is really, really important. And learning to lose appropriately is even better, right? So you define your risk and you stick to it. You do what you said you would do. So basically you have to say what you do and do what you say, right? So if it's a matter of discipline, for most of us, that's where the problem will be. right? Because we have those two little voices. We have to learn to kind of minimize what they're trying to tell you and think through those little voices, right? You have to think through that mayhem that's unfolding, right? So what we end up doing is buying fear and selling greed, right? So if you notice here near the previous existing high, this high was put in the European session, and I started trading at my regular time, 10 o'clock Eastern. At 10 o'clock Eastern, the market was running towards the pre-existing high. Right? So in the American session, we failed to make a higher high. I started to sell greed, right? The greed, the people playing the breakouts, the people expecting it to go to the moon. I was selling it to them. The ceiling or the top, the high of the day, put it in the European session, it held in the North American session. And the market started to rotate from there, right? So I was selling greed. I was selling resistance, right? So a green candle right here is a better price if you're short than a red candle, right? So you'll notice most of my trades would have taken place on a green candle, right? So even this was green at some point. This was green at some point, and this remained green, right? And so every time you see me entering on the way down, I'm entering when it's a good price. It's a green candle, right? If I do the same thing on the way up, if I'm bullish on the day, you'll see me buying the bottoms of red candles, right? So if you can see me trading in a bullish fashion, you'll notice we tend to trade, we tend to pick up, this is all bearish, this is all bearish, this is all bearish. We tend to pick up the opposite candles. Okay, so you're looking for the best deal. You're looking to not rip yourself off by, buying at the most expensive price. You want to sell the most expensive price. Right? You want to buy the cheapest price. Right? So it's really a function of discipline, patience, a little bit of logic, waiting for the price to come to you, right? And what we've done in the beginning, before we started all of this, is we understood what an average move looks like. And we also saw what the market had already delivered, right? So with the market had already delivered 1, 2, 3 boxes, all of a sudden it decides to retrace 1, 2, 2.5 boxes. It still has yet to make a higher high from the European high. All right, so we're pushing up against this upper limit, and we can, I guess, use this to define our risk. Right? So if I was to take a sell trade right now, I want to wait on the green candle, so it's a best price, not the worst price. If I can get a green candle around this support area, it would be at resistance, right? So if price comes back to this, it's at resistance on a green candle, and I'm selling it. The probability that resistance holds is in my favor, right? There's more bounces than there are breakouts. And so I'm betting on a bounce. And if I'm betting on the right time frame, a bounce right now should be maybe 1.4 pips. Hours ago, the same bounce would have been way bigger, right? The bars were way bigger. And so we bounce for 1 bar, right? So the failure of that resistance is an opportunity for us to add to that first click, right? So we have multiple clicks per box. We try to spread about 4 clicks per boxes, and each click is 0.25%, right? So in theory, we're trying to expand. We're trying to deploy 1% of our capital per box, and we're only willing to do it for 4 boxes maximum, right? That's not each and every case, but that is the most expensive scenario, right? 4 boxes, 16 clicks. What we aim to do more often than not is just to recycle, which is what I was doing here today, right? So I'm not exploiting very, very many clicks in drawdown. Instead, the clicks are paying almost instantly, right? 3 minutes to make the money. Here, it took longer, right? It took 20 minutes, 21 minutes to make the same 3 pips, right? This trade took 37 minutes to make the same 3 pips, right? We have an average expectancy or potential average yield, right? And right now we're selling at the top. Does that make sense? If I'm selling at the top right there, this is a standard deviation. The market has already moved 1 standard deviation. There's a probability of a bounce. And at the same time, the flip side to that probability is a break, right? So by looking to our left, we can devise a plan that can either exploit a break or exploit a bounce, right? So in the moment, in real time, you tend to have a bias, and you tend to play into that bias, right? Right now, I'm leaning into the European high, right? I'm betting that the high will hold. I may be wrong, and in the case that I am, the stop losses for the trades that I just took a few minutes ago are up here, right? So I have the ability to operate within a range, and that range is predefined. And within that range, I can exploit more than 1 click, right? So ideally, what we're trying to do is create an average number of clicks every time we sit down to trade, right? So if I just sat down now, maybe this was the start of my trading session, and if I was here for 2 hours, right around here, right? So if this was my trading session, the closer I get to this, the closer I get to the end of my trading session, the more aware I am of the risks that I'm taking, right? So ideally, what I'm trying to do is be flat as I get closer to ending my trading day, right? Just like down here, I only had these 8 clicks remaining, right? And then as we started to speak, I added a few more, right? But in theory, I'm aiming to capture a potential average yield because it's the average of that 2-hour session, day after day after day after day, right? So I'm trading the same window of opportunity. It delivers an average number of opportunities, and I aim for that average on a routine. Like it's a process that leads me that way. Okay, and so we have the ability to operate within an envelope of risk. In our case, that's 4 standard deviations or 36 pips. But that doesn't mean you lose 36 pips, right? That means you define your risk and you take the losses where that definition tells you to, right? This is just an ejection seat. Right? This is the worst case scenario unfolding and closing a trade before wrecking the entire account. Right? So this is the saving grace. This is what allows you to come back and trade again tomorrow. But you, the trader, you're responsible for, managing this risk. And so if you don't like what you see, if it's going against your plan, do something about it, right? And that's what we train ourselves to do, right? So we define the environment, whether it's a 9-pip box or 4 of them, right? It's still the same psychology, right? We're still trying to find that next move. In my case, I was finding the next move here, and I made my money with it. The current move is here, and I'm hoping to make money from the next move, right? So I'm playing ping, 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 while some people try to play ping, pong, ping, pong, ping, pong, right? I just choose to sell the tops. That's it. And so for today, if I'm right, it may take an hour, it may take 2 days, it may take 3 hours, it may take a week, right? As long as it doesn't threaten my stops, I'm just going to leave it as is, right? The idea is that the probability is working itself out, right? I can't change the market by throwing money at it. What I'm doing is changing where break even is by throwing money at it, right? Or by removing trades, whichever comes first, right? Whichever is necessary. And so just now, as we were speaking, we created a higher high on the daily candle. Right? This was the European high. This was the North American high. This is the new North American high. Right? And there's a sense of urgency building. Right? You can feel it. If you go to this daily candle and you zoom in, there's no wick here. Right? This thing is pushing and pushing and pushing. What we have are shorts up at the top. In order for us to satisfy these shorts, we need a wick. Right? We need some kind of rejection. Where might that come in? Right? So you start looking left for areas of, previous resistance, previous support, so on and so forth. Right? So you're always looking to your left for clues where the market may be trying to go to right now. Are we trying to get back to this level? Right? This morning when I was selling at the top up there, when I was selling here, I was looking to get back in on the long side down there. We clearly never made it there. Right? So we create a plan called that plan A. How am I going to make my money today? And then if that doesn't happen to work, or if it slips away from you, halfway through, you're now working with plan B. And so if you can create plan B before you're forced to use plan B, a lot of the anxiety gets removed right away, because you already know what you were expected to do here. You have an idea. You're just unfolding that idea. You're just putting it into play. And right now, my thesis, since we started speaking, about 30 minutes ago, we're looking to leave a wick on top of this. Just like there's one here, one there, here, here, here. Right? Most candles have wicks. And so between now, the high of the day, and the close of the day, I'm hoping we'll have retraced maybe a couple of times. Right? It's the idea that I have a range to operate within, and the range does not have to be, I don't have to be trend trading to be a range trader, right? I can be counter trend trading as long as I manage the risk, which is what we're trying to do here. All right. So by defining where the problem areas are, you can take advantage of that, or you can lean into that information, right? You can use that area to define what you're going to do there, and then do it. Right? It's nice to have a plan, but it's nicer when you have something that works, right? So the alternative is to just sit there and watch it go to your stop loss, and you're not interfering with anything. I would rather try to steer where break even is. Right? Break even is the average cost. And if I add a trade, I can change this average cost. If I remove a trade, I change the average cost. I can engineer that white line so that the market trips over it. And so if I can get to break even, it's a lot cheaper, easier, and sometimes less anxiety than trying to pray that it doesn't go to the stop loss. Right? I would rather be involved in the outcome. Right? So I engineer what I need to see on the chart, because I can control how and where and when I spend my money. Right? I'm not trying to change the market price. I'm trying to change my average price as opposed to the market, right? Compared to the market. It's positioning, right? So when we look at something like this on the daily chart, or even better yet, the weekly chart, value traders, right? Guys that trade the weeklies and the monthlies, the guys that hold on to things for quarters, they're looking at this chart right here, and they're probably watering at the mouth every time it dips like this. Every time it dips like it did 2 days ago. Right? This chart for a value investor is a long-term bullish chart. Right? We've been making higher highs and higher lows all of 2025. And I think if we can get to that 120 area, looking to our left, that 120 area is resistance / support. It's a good place to start to see those value traders maybe looking to get out. Right? So when we see from the big picture and we start to narrow down the time frames, you look at the hourly, you look at the 5 minutes. By the time you're trading on the 1 minute chart, you're still trading the same information, but now you're looking at it through the microscope, while the value investor is looking at it through his telescope. Right? It's a very different perception of the facts. We're still making money. We're still managing risk. We are just not forcing ourselves to use a statistical requirement. Right? We're not forcing ourselves to have a positive risk to reward ratio every time we click our mouse. Instead, we use an average price with a constant stop loss and the environment that it creates, right? The space that we have access to in order to engineer or create what you're looking for, right? This is a way of, I guess, imposing your will upon the market, right? I need 3 pips 10 times. I need 3 pips 60 times, right? It's a lot easier to engineer what you're looking for when the target is achievable, instead of having a 60 pip target that you don't even know if it's doable. Right? So in theory, you're creating the outcome that you're looking for as more information comes in. Right? So now that we've tested the previous high, we've made a new high. If we look at the daily candle and measured its average daily range, the true range for the last 14 days is 79 pips average. what is today? 61. So we're still missing approximately one box, maybe two boxes. Right? So are we going to add the missing to the top? It doesn't have to be exactly average, and that's why we have averages. Right? Some days are more, some days are less, but we're aiming for the average. Right? So once we've exceeded the average, it's not uncommon to see a pullback. And if we're missing, or if we're shy of the average, it's not uncommon to see us pushing towards it. Right? So this is just a point of reference. It's not a holy grail. It's just one more arrow in our quiver. Right? It's just one more clue that we can use to do the right thing. Right? So in a roundabout way, we are playing breakouts, but we're extremely patient, and we make our money while we wait. The breakout ends up being something we fix. Right? So if it is breaking out right here, which it is, I'm averaging in order to move this closer to the current price. So if I was to put a click right here, the white line just moved up. If I put another click right there, so now I'm up to 13. I'm only allowed a maximum of 16 amongst 4 boxes. So I'm in the 4th box right now. I have 3 clicks left. I'll put one there. Now I have 2 clicks remaining, which is part of the system, right? I'm not over trading here. I'm allowed to distribute 16. I still have 2 remaining, which is within the model, and my break even is now 18 pips away, 2 boxes. Right? The market can move 18 pips with its eyes closed. Right? So this is a lot better than expecting it to go all the way down here. Right? So I'm not worried about this last click here. I'm not worried about this last TP. If I can get to here, right? If I can get to here, I can flatten everything and lose nothing. Isn't that like, that's kind of like the best case, right? Better than that would be to make money, right? So here's click 15, still within the 4 boxes. And on this higher high right there, I'll put click number 16. Okay, so now I have 16 clicks. I cannot click anymore. I have no choice but to wait and see if some of these trades will close. Right, so just for the sake of argument, let's measure this with the fib and then start to see where break even is. Right, my break even is near the 50%, 61%. This would be ideal for a bounce. If we get what we're looking for, this is the time for it, and this is the destination for it. And it so happens that it would limit the damage, right, of being wrong if this is going up and 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 up. Right, so counter trend trading is not a problem as long as you size appropriately and you define risk. Most people are told, and by definition assume, they are trend traders. There's nothing wrong with that if you can define trend, right? If you can define the trend and define where it's no longer a trend. Most people have difficulty with that. And so to be a range trader is probably a better place to start. Right? Ranges are way more common. And since the month of August, we've pretty well been ranging, between 750 and this area here, this area here, 1400 to 1750. We've yet to make a higher high. We've yet to make a lower low. And anybody that's playing breakouts has had multiple false breaks on both sides. Right? So when you're playing breakouts, you take losses and you have very few options to repair those. You have to basically trade through those series. And what we're doing is creating series of wins. And when we lose, we also have series of losses, right? We don't just have individual trades making up our statistics. Our statistics are made up of series of trades. And so, let's take a look at it here. All right. When we want to look at it maybe from a weekly, you can figure out on average how many pips you earn, how many trades you put in per week. You can figure it out monthly, how many clicks, how much money, so on and so forth. You want to find a groove. You want to find an average, just like the market moves on average. Right? So by lowering your expectations, you tend to achieve them. You don't have to be upset and pissed off for missing the mark. And think about it. For tens of thousands of years, humans have been marksmen. Right? We've been hitting the mark. Otherwise, you starve. And so, for this, in our mind as traders, the marksmanship is really what keeps you married to your trades. You don't want to give up, when in reality, sometimes giving up is the best thing to do. Right? So you're competing against tens of thousands of years of evolution. You're trying to do the right thing for the account, not for your ego. And that's where the problem lies. Right? So here's our first winning trade since we started talking. Our break even just moved a little bit because we closed one. And so if I get a green candle, which I see one right now, I will recycle that trade. Right? So I put that trade back on. I put it over here. And so now break even came back up and it is still 18 pips. Right? So I'm tugging on the break even towards me and the price is hopefully moving towards it. Right? So I'm in control of this. If it starts to go the wrong way, or if it continues to go the wrong way, look at the ADR. As it exceeded the ADR, how much further can it go? Right? There's times, depending on the catalyst, where we'll do 2 days in one afternoon. I've seen the market move 150 pips when the average is 75. Right? So it does happen. And that's why we have an ejection seat. Right? But we don't lean into the ejection seat in order to tell us the trade was bad. Right? We define that beforehand. Right? So ultimately what you're learning to do is to lose. And the byproduct of that losing behavior is making you money. Right? And so if we wait long enough, we're looking for this to come back 21 pips, 20 pips or so. It doesn't have to obey the 2-hour window, right? That's me imposing a quantifier, a filter, right? That 2-hour window is because I don't want to overtrade, right? So it's forcing me to walk away on schedule. This new 2-hour window that I'm in would typically be in a different account. So I rotate every 2 hours. So I move to a different account every couple of hours or so, or every trading session. And if that new 2-hour window, or that most recent 2-hour window, happens to be the worst time of the day, the damage will be limited to this account. Right? So the profits that I would have earned this morning are safe, and whatever I'm doing in this account this afternoon is now exposed to risk. Right? So I keep things separate. I keep the apples with the apples and the oranges with the oranges. And so most people have a problem with that, because as swing traders, you start on Sunday night and you have trades open all the way through till maybe even next weekend. Right? What we aim to do is to be flat every day or multiple times per day. Right? So you're earning the right to reassess your size, reassess the situation, whether you want to take trades or not. All of this is pertinent. And that's the stuff we tend to ignore, right? The minutia is what tends to get us in trouble. Right? So because I had existing trades here, my break even is somewhat elevated, or no, it's away from my current trades, but I'm not worried about it, right? That's the aim of the game. I've created an environment where we measured the end of this move. We're expecting the beginning of this move, and we don't know where it's going to lead to, but we're anticipating 50%. Ideally, we'd want to see 60%, or 61, right? But this is where we start with the boxes, right? If it is going to go down, it's going to go down 1, maybe 2, maybe 3 boxes. If it's an uptrend, it's unlikely to go down all the way back to 100%. It's just unlikely. It's not 0%, but I'd say it's, almost 99% unlikely. Right? So you kind of create this mindset where you can impose your will on the markets. Right? You can extract what you need if you have the bar low enough and the willingness to repeat the process. Right? So most people come to trade expecting this to be random and a side effect of luck. Right? There's no luck here. There's zero luck involved. I'm using probabilities and my mindset to keep me from throwing in the towel. Right? And the law of large numbers keeps us from giving up. Right? We overwhelm the losses with many, 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 many tiny wins over time. Right? We have a 20-year career in front of us. Just because you took a 4% loss does not end your forthcoming 20 years of trading. Right? It's not the end of your career. This is where we have to have this commitment thing, the discipline to, commit. What we need now is a pullback. On the daily, we're looking for an average wick. Average wick gives us an average move. Average move should theoretically bring us to an average pullback to 61%, maybe even a little bit more. So we're not looking for the world. We're not looking to rewrite history. We're just trying to finish what the market is capable of doing without a catalyst. Right? No news is involved in this. This is just the market doing its own thing. Right? The news was back here, way back here. Right? So we already have the catalyst out of the way. We're just now, it's the motion of the ocean, so to speak, right? We're just benefiting from a average day. And so when there is news, it creates added volatility and added uncertainty. And from this system, we know to avoid those events, right? So we wait 801, 802, 803, and then we start. It doesn't have to be, trying to chase the news event. So hopefully in a matter of a few minutes, we'll find the high we'll experience a little bit of a push off of resistance if we're lucky, right? And we'll be able to close some of these trades. In theory, we traded counter trend. Right? We did it with 16 clicks, and we still have an expectancy of an average move. So whether it be in this direction or in that direction, an average move somewhere around yay big, right? Bullish or bearish, could be coming any minute, right? Either from here or from there. We're expecting it to come back here, right? Just an average move, the average of bullish and bearish. That's all we're looking for. It's a game of averages, and we're using probabilities to gauge and manage the environment. Right? So we have a lot more control than people think, and we're not relying so much on fear or greed. We're actually exploiting that. Right? The fear, the greed is all part of the system. It's how the market exploits the less sophisticated traders. It's an emotional challenge, right? And so we can see our way through this if you remain calm, if you create plan A, if you create plan B, if you define your risk, and you don't bet the barn every time you click your mouse. Right? So you're milking the cow so many clicks per day. Right? So far in my 2-hour session this morning, I think I did about 30 or so trades. And in this session now, this afternoon, so this morning I closed 32 trades. In this current 2-hour session, we still have 8 from this morning, and I just took 8 more, so I am back to 16 clicks. I still have my break even. That's about 19 pips away now, right? And the price is moving towards it. And so I cannot add anymore. I cannot remove. Well, I can remove, but I won't, unless we book a profitable trade, right? As soon as we book a profit, the next green candle allows me to take that trade again. So I'm a recycler from this moment on. Right? Because I have my 16 clicks already spent, I have no choice but to wait for an opportunity after I've booked a profit. And so with any kind of angels on our side, we'll be able to make it down here. Maybe in the Asian session, maybe in the North American before the close, who knows? Right? We're not looking for the bottom of the abyss. We're not looking for a miracle. We're just looking for an average move, which the market can do with no catalysts, right? Without a news event to propel it there. So that's really the key. Right? We're trying to avoid all of these news events on purpose. That's its own trick in our bag of tricks, right? Trading news is its own thing, and it could be accommodated with a strategy similar to this, but it's not the main objective. Right? We don't want to be chasing stuff, and worse yet, we don't want to be predicting things like a news outcome, right? So you let the news come and you do what you see fit thereafter. It's a lot simpler, a lot safer, and with any kind of luck, these 17 pips, will come just as a function of normal market price action. I'm not forcing it. There's no way that I can move the price by throwing more money at it. No, I'm just way too little. I don't have the bazillions of dollars to move price. So the best that I can do is exploit other people's fear and other people's greed. And that's basically target trading, right? Or I'm extremely patient and routine minded, right? That's where the discipline comes in. You wait for 8 o'clock, you trade at 8 o'clock, you trade for 2 hours. All of that serves a purpose, and it's part of the risk management. It's not to limit your potential throughput, right? This is to limit what you're likely going to be giving back if you don't stop. Right? It's to force you to stop trading. We have a lot of fun doing this because you control, you create, you have a say in what comes next, in what happens to you. Right? Most people don't see it that way. Most people are assuming they're in it for the ride, where they can actually control the ride. Right? You can control the level of comfort. So a lot of what's happening is self-induced. Right? This anxiety that I'm in right now, I did it to myself. Right? I put in those 16 clicks against the trend. And if I did this without a plan, I'd be freaking out right now. Right? But the plan is the plan is to take advantage of levels. In my case, a new high on the day. It's not going to the moon. It's just fulfilling its average daily range. Right? So by having a definition of what I'm trying to do, of what my plan entails, I'm not freaked out by normal price action. And we get to the point where normalcy is boring, right? But in trading, it's quite the opposite. You know, if you can find normal, you can exploit it. There's nothing boring about that. All right. So in theory, 9 pips over 9 pips over 9 pips over 9 pips is what we're dealing with. We have no idea how the next 9 pips will show up. Right? We just don't know. And so, you know, if we started on this swing low, we went up 4 boxes to the pip. If we assume this is a new high, how many boxes will it take us to find the new low? Right? Where is the low going to be? Right? I'm hoping it's somewhere near here. Right? I'm hoping we bounce off of this. Right? And I'll be able to close all of 16 clicks, since I'm about to recycle this one. All right. If I see a green candle right there, I just put click number 16 back in. All right. So now I'm kind of repeating this over here. If I can get to that white line, and so every time I close a trade, I put it back on. I keep pulling up on that white line. Eventually, I'll get over it. I'll cross it. And that's the idea.
This went way more in depth than I thought, so we definitely covered a lot here. So I really appreciate that. It's pretty cool. Every time I think you're doing something wrong, you're actually kind of right, which is kind of insane too. But definitely, if you have any questions, make sure you comment below. We might do a video answering questions in the future about the kind of how you trade, and I know people have questions about your style and a couple of things we can discuss more in detail. So guys, comment below. And if you want to learn from Jean-François, we have the link below too to learn from you. Take the Elite Scalping course, trade with you live twice a week, and get these good trades in. And hopefully, you can kind of start there and learn some good results from your style.
The objective to all of this is to be in control of your break even. Right. So wherever your average cost is, that's what you're in control of. So whether you're trading futures or stocks or whatever else, the minute you take a second trade, you're in control of that average. And whatever you want to do from there, the market doesn't have to be painful, right? Just manage where that average is compared to where your plan should take you, and you'll be all right. And if you need more help, you know where to find me.
Nice. Thank you for your time. I appreciate it. And we'll catch you guys pretty soon, hopefully in the program.